Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on BBIG. So to get straight into it, obviously you can see on the day, main reason we're looking into this is it is down over 11% on the day. So though, to get onto the longer term charts, the standard deviation chart, 6 months on the left, 1 year on the right, what are the key levels looking at going forward? So as of right now, we have two supports to be paying attention to. And they're going to be at $23.29, 23 cents and also 29 cents. Now, these are used really only in one way, and these are what is considered statistical mean. So these aren't supports in the sense we will look to trade off of these levels, meaning we're not looking to really buy off this level. And the reason for that is this line here is basically just considered fair value. So within this range is considered fair value on the stock. So I'm not looking to buy into this level, but if I was holding the stock short, this would be my final target. So that's how I look at these statistical means at. Now though, on the other side, if we start pushing up in price, we then have resistances at $1. Basically, smack on $1 is our first deviation on the 6 month. Heavy resistance. If we broke higher, we'd be looking at $1.25, $1.75, and then pushing up from here would be $2.50, $2.25, and final levels taking us all the way out to around $3.25. Now again, how do we use these resistances? So these resistances are a bit different to the levels we went over before because we actually look to trade off of these levels. So the first time we come into this level, the way I tend to trade them is the first time you come into a level, you expect a pullback. So again, I can basically get two trade opportunities off this. Look to trade the initial pullback. Once I'm up a good amount, I'll move my stop to break even. So if it goes against me, cool, I can get out the trade break even. I'll probably lock in a tiny bit of profit as well. But what I'm really trying to hold on for is a reversal back to its statistical mean, because these are really going to be the home run trades. Yes, they won't work out every time, but what will work out quite regularly is the initial pullback. So say 9 times out of 10, you'll get the pullback at least. So worst case scenario, you get that break even. But about maybe 3 in 10 that they'll go all the way back to that statistical mean. So that's what we're really looking for. And again, that's the same on all of these levels. So that's the first thing, is the initial pullback. Then if we come back to retest this level, what I'm waiting for is a breakthrough, come back to test it as a support. And if it holds, then you expect a move to that next level, which in this case would be $1.25. So again, really looking for that same thing the whole way up. You can, if levels are close together, use them as zones. So potentially you could use this as a zone because it's only a 25% difference. But obviously on a stock like this, that is still about 10%. So it's up to you whether you use it as a zone or individual levels. But really where the key levels come, the strongest possible levels, are when two levels line up together. So what you can see is the fourth deviation on the 6 month lines up onto the third deviation on the 1 year chart. So if we did push up to this level, really strong, high probability that we get a strong pullback, if not a reversal. So again, looking for that same trade as normal, but looking to do it with more size. So that would be really what I'm looking at on BBIG going forward. Again, not too many trading opportunities, or isn't really trading opportunities to the downside. I'm paying much more attention to if we can push to the upside. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe, and check out this analysis video.